My draft law on virtual assets has just been approved by the Ministry of Finance, so that should be out in Jamaica in law very soon. So that's exciting. I think that makes it now my 8th or my 9th jurisdiction.
If you don't already know her, Loretta Joseph is one of the world's leading voices in digital asset regulation. A former managing director at major global banks, she now advises governments across the globe, writing crypto policy for over 30 countries from Bermuda to Nigeria to Jamaica. In this episode, we dive into how she's shaping the future of finance, the rise of stablecoins, and why emerging markets might leapfrog the traditional finance system altogether. Make sure to subscribe to the channel so you never miss these deep dives. And if you want to join us live and ask questions directly, check the calendar link in the description below.
So I got into it because in India when I ran RBS, I had a huge back office. And I remember two of my young guys coming to me asking me if I had heard of Bitcoin. And I think that was really early. Would have been the beginning of 2010, even maybe 2009 at the end. And I was like, no, and I wasn't particularly interested, but they kept pestering me. And then one of them told me to go and read the Satoshi white paper on Bitcoin. So I did. And it actually stood out to me. It's 9 pages, anybody can download it off the internet. It was designed as a peer-to-peer cashless system. But when I looked at it and I looked beyond the mathematics of it, and I just looked at it from a logical perspective and saw that this asset was actually atomically swapped. I figured that out myself. And it could take out the clearing and settlement requirements of financial markets as they exist today. I was gobsmacked. So I wasn't particularly interested in Bitcoin as such at the time, but the technology that allowed us to remove the friction in the systems where it all occurs in clearing and settlement was very obvious to me, because all these systems that banks have the back offices, they're really manual. And back in those days, we'd still have to bring up we had a 24-hour trading desk, say at RBS or at Credit Suisse. So we'd pick up the phone at the end of the day and pass the book to the next time zone. We'd pass it to another time zone. So we had this 24-hour clock of this book. If the book got filled, orders got filled in, say, the Indian time zone, and they weren't picked up in the morning by the New York desk, it was a real problem. But these problems existed for many years. And that friction in the system takes out a lot of money in the financial system. And so we came up with a digital asset bill, which we whiteboarded. Me and the drafters who thought I was completely crazy, and I think Joseph Weinberg, who was one of the Bitcoin pioneers, came with me, and we whiteboarded what a law looked like. And to be honest, I look back at that law now, and I am so proud, because it stood the test of time. And we bore out of nothing a piece of law that has now shaped regulation and legal frameworks going forward. So I'm so proud of that. So now that I do it, this stuff is in a template in my head. I can sit down, revise laws in a country, look where their pain points are, which pieces of law is missing which, whether it be from their money laundering laws or their securities law, figure out where they don't fit. Writing these legislations and these regulations to me is now like cookie cutter stuff. I can do it. I can do it in my sleep, and I do. And I wake up in the mornings and I think about stuff. So what I've done in the past is really good, but it's not what I do now. I look forward. So instead of a bunch of financial consultants running into these countries and charging them a fortune and giving them a useless piece of legislation, which I've seen across the world many times, and been paid by some of the larger organisations, policy organisations in the world to do that, is not the right way to do that. So we gave everyone a model and everybody can use it. It's the same across the entire Commonwealth. And it means that these Attorney General's offices or the drafters of laws in these countries have an ability to have a model which they can follow. Yes, they have to tweak it to their own legal systems, but it's a generic model that can be implemented across the 56 countries of the Commonwealth and is the same across all of them. So it's a really good model, and many countries have taken the virtual asset model, or I think there's about 30, and there's about 10 more working on them at the moment in the Commonwealth. So that in itself shows that this was something that countries needed, and especially the small ones that don't have the resourcing. Stablecoins is the flavour of the moment. It's the topic that everybody's talking about. But I've looked around the world and I've compared many laws, and I don't think any of them are particularly good. We said stablecoin issuers don't necessarily need to be financial institutions. They can be virtual asset service providers, because in this whole ecosystem, you need the exchanges. When you have a stablecoin, you've got to cash it in somewhere. We're going to go to JP Morgan and they're going to cash in their own stablecoin. It doesn't work. So we've included VASPs to be allowed with a proportionate amount of regulation that's prudential and AML and consumer investor protection. We've got a tier for VASPs, and we've done it in a tiered approach. We've included algorithmic stablecoins, and we've also included yield-bearing stablecoins. Now, everybody told me 6 months ago that there was no way that yield-bearing stablecoins were going to happen, and I was stupid. And I was like, no, I promise you, in the next 6 months, someone will issue a yield-bearing stablecoin.
PayPal and who recently, right, just said a yield-bearing stablecoin.
PayPal on Friday. You get 3.14%. And I've been looking at this for a year because if you look at the ecosystem, there's a lot of money in our ecosystem. There's so much money. These people generally don't want to go back into the fiat currency system, to be quite honest. I think the UAE have got some stuff. There's some stuff out of Singapore. There's something in MICA, but none of them covered what I would say is the full ecosystem for stablecoins, like yield-bearing stablecoins, algorithmic stablecoins. Whether you like them or you don't like them, people are going to use them. I think this is the first time in history in this ecosystem that you've seen that. You've had one piece of law that other laws, depending on the products and services that come out of the ecosystem, can now be built under. Australia, Canada, the UK, they think they're very good at what they do. Like, we're very regulated countries. They think that they can do it better. That's good for them, and I hope they have come out with pieces of law that people like and can be usable and user friendly. But we did it because, like, Australia, Canada, and the UK don't make up the Commonwealth. The 2.6 other billion people, the 2.6 billion people that are in the Commonwealth don't come from those countries. You can't rehash old laws, and you can't fit round pegs into square holes. And that's what a lot of these first world countries, the Commonwealth, have tried to do. They've tried to fit digital assets and crypto into existing financial laws, and it does not work. I think if you look at what the standard set is saying, so you have a same risk, it's same similar risk, specialised regulation, because this ecosystem can't be fit into regulation that exists in the world, and then you get the same outcomes for financial stability. I think you'll see a complete shift over the next 10 years where these populations, like in Nigeria and India, where half the populations are under the age of 30, they're going to be the dominant forces. It's not going to be the UK or Australia or Canada. They're going to play catch up. And the genie's out of the bag. And I'm so proud of the island states that I've worked in. They can't go and build and manufacture cars. What do? They, like, Bermuda or Mauritius or even Jamaica, they need to find innovative ways to support their economies.
What's the one piece of advice for the builders navigating all this regulation? What's your imparting message to them?
Keep building. Put your head down. Don't get involved in the froth and the arguments online about who's better than who. Just keep building and make sure you've got a really good compliance team in from day one that can help you, or you've got a mentor or someone like one of all of us OGs. Make sure you can reach out to somebody that can explain to you what you need to do to understand this. Because I understand the builders are technologists. What on earth do most technologists know about money laundering, terrorism financing, and why should we? Because all of a sudden we have to.
Loretta's message is clear. Regulation doesn't have to kill innovation. Done right, it can actually unlock it. As stablecoins, digital assets, and real-world tokenization grow, the rules being written today will shape how the future of finance plays out. If you're a builder, policymaker, or just someone curious about where money is heading, this conversation is a must-watch. And a reminder that the most important work often happens quietly in policy rooms, long before it hits the headline. If you found this valuable, subscribe to the channel. It helps more than you know. And don't forget to check the link in the description for a live session calendar. Join the conversation. See you soon.